No.
All right.
You're a public body.
Yeah,
So
you have
there it
to.
is.
You have to say.
Okay, all set.
Good. So first, to begin, as Carrie mentioned, we want to welcome Jennifer to the committee, to the trustees. So Jennifer, just to give you a feel, over the years, there's been a lot of really good financial management expertise as the trustees, and certainly it's as strong today as it's ever been. Something that started to come up over the past year or two is, obviously we have two jobs, one of which is stewardship of the money, making sure it's growing, invested in a responsible way. But every bit as important to the folks who made the donations is making sure that we're expending it consistent with their wishes as well. Our job isn't to have the biggest fund possible, it's to make sure it grows responsibly and that it gets out. So I think it was Christine, or I'm not sure how you got interested in becoming a trustee, but I think having you on really helps to balance us out. Like I said, among the current trustees, from the financial side, but I think what you could bring will be very helpful. So welcome.
Well, thanks. It was great to connect with Chris. And I hope I can lend a different lens that's not so investment oriented in that regard, but certainly from the community aspect and dealing with the wishes of the funds. Yes, thanks.
So terrific, and hopefully we'll all be able to meet in person at some point over the next year.
Yeah.
So next thing is the minutes. So I think I'm the one who owes the July 28th ones. So we can kick that over. Carrie, I thought we had the June 10th ones.
I can go back and look. I guess I don't remember seeing them, but I will double check.
I seem to remember you expressed surprise that I actually submitted them on time.
Oh, that's why you remember it.
Yeah, that's right.
I'll go back and look.
All right. So we'll defer that one until next time. So Carrie, if you're okay with it, should we let Matt go so we can let him go after that?
Sure, that's fine.
All right, Matt, welcome.
Thank you so much for having me. Carrie, I believe that you had circulated around the materials to everyone.
Yes.
Did everyone receive those? So I apologize for not being able to share my screen. I was telling Carrie before the meeting started that we're unfortunately not allowed to use WebEx here at work for security purposes. So I will do my best to tell you what slides I'm on, and I will try to keep this relatively brief for all of you guys. So I thought I would just start with a quick kind of economic summary, kind of what we've seen, what we kind of look forward to seeing, and then get into the portfolio things. There have been a couple kind of changes in the portfolio as well as things we're thinking about moving forward. And please don't hesitate to stop and ask me questions as I kind of go through this. So really quickly, I'm just going to run on to page 4, which is just kind of the economic update here. Obviously, it's been quite a year in the markets and in the economy with COVID and also the election. We had saw a very strong third quarter GDP that was off of a very poor second quarter as a result of COVID and the pandemic and global economy effectively coming to a kind of a standstill. Since then, we've seen a tremendous bounce back in economic activity. So all of the forward leading indicators that we look at have been really, really strong the last few months. Things like consumer confidence, purchasing managers index, the unemployment rate started to come down a little bit. GDP growth, like I talked about, is kind of off the charts again. It's off a very low base. But all the numbers that we look at have been really, really strong. I was thinking consumer confidence has been maybe a little bit wavy here over the last couple of months with concerns about rising COVID numbers. But besides that, we've seen what we call a V-shaped recovery in just about every indicator that we look at. I didn't even talk about housing either. The housing market's been extremely strong, just off the heels of extremely low mortgage rates, as I'm sure you're all aware. The markets, there's kind of been this discussion, if you pick up Wall Street Journal, the dislocation between the markets and the economy, the kind of the real Main Street economy. And I think that if we're trying to CNBC, the argument would be that, well, the market's really kind of looking forward kind of through this pandemic into 2020, into 2021 and beyond, as really kind of been pricing in market activity moving forward. I would tend to kind of agree with that notion, but the reality is right now that the stock market is not cheap. It's kind of hard to argue that it's inexpensive. I think that's fine. The market can remain expensive for a long time, but I think that does mean that we need to see some strong earnings numbers in the next several quarters. A lot of people kind of focus on the S&P 500. I'm on page 6 now. We show these returns through October 31st. I apologize for that. The rest of these figures are all through September 30th. But just to kind of give a sense of what we've seen in the markets, just kind of going top to bottom, the S&P 500 through October 31st was up about 3%. Every other equity asset class, with the exception of emerging markets, was down mid-single digits to double digits. International kind of being the worst performer here, down about 11% or so. So there's been a tremendous discrepancy in returns in the markets. Like I said, the U.S. markets, the S&P 500 being the strongest performer, but then everything else is really, just really not kept pace with the S&P 500. I'm on to page 7 here. One of the big questions that everyone's kind of focused on is COVID-19. It does obviously kind of pick up the newspaper. The number of new cases has been kind of steadily increasing here since early September. And that's something that, we're obviously keeping a close eye on. Concerns about the economy shutting down again, they're very real. And I think that there's a lot of questions as to, when's this finally going to end? Obviously, there have been some really good news coming out of Pfizer, Moderna, Eli Lilly on the treatment front. But it remains a question as to when those vaccines and treatments will be kind of rolled out to the broader public. I do think that, one of the, kind of the silver linings here on page 7 is that the U.S. daily deaths has kind of been fairly stable going back into about July or so of this year. And there had been some discussion earlier this year about how the U.S. COVID numbers were kind of not doing nearly as well as the rest of the developed world. Clearly, if you go to the next page, page 8, unfortunately, the numbers kind of across the globe have continued to rise as well. I did talk, if we're looking at page 9 here, just about the bounce back in the U.S. economy and the real GDP. Again, it's coming off a pretty substantial base here, down about 30% in the second quarter of this year. Again, the question that we have is, does the increase in COVID numbers impact the momentum of this recovery? It does remain to be seen. I would kind of highly doubt that we're going to go kind of back into full shutdown mode here. But it's going to affect the economy if we do shut down even partially. Clearly, the election had been top of mind, still kind of is. The market bounced pretty substantially after it was announced that Biden had earned enough electoral votes to become the next president. That, along with the split, with the Republicans retaining control of the Senate, has created a split government, which the markets view favorably. If you go to page 13, we show just how the market return and kind of annually given different control of the White House versus the Congress and the Senate. And the markets tend to like when we have a split government, just because it's kind of more status quo. So the concern about the Democrats potentially sweeping was that there would be some of these more kind of tax overhauls, which could potentially lead to decreases in earnings. That is unlikely to kind of happen, at least as campaigned upon with a split government. If we go to page 15, this is just showing how our positioned for our client portfolios. We are relatively neutral stocks to bonds. I would say we're neutral on the stock side and slightly underweight on the fixed income side, with a small overweight to U.S. large cap and a slight underweight to international and developed markets, think Europe and Japan. We had been relatively underweight to emerging markets. That is an asset class that we've added to over the last several months. That was a result of a weak dollar, which tends to favor emerging markets. And I would imagine that that small underweight to developed international. I would imagine that at some point we would take some money off the top of U.S. large cap, given how well it's done, and potentially add a percent or two into developed international. As far as the fixed income bucket goes, we do remain slightly underweight there. That's just the result of where fixed income rates are. It has been a tremendous time for people to borrow. I just talked about mortgage rates being incredibly low. Unfortunately, that means that looking forward for people that own fixed income, the return expectations, maybe aren't as attractive as they were when the rates were a little bit higher. I do think that fixed income still plays a strong part of an overall portfolio, but it's really not an asset class that we're leaning on for a lot of return. It's much more, I would say, kind of a source of ballast in the portfolio. So we're, trying to take advantage of, if we were to see a pullback in the equity markets, we'd be able to use those funds to get us back to our target asset allocation. Overall, I would say we're kind of constructively optimistic. I think if we look at 12 or 18 months, the market is going to be higher, the economy is going to be stronger. Unfortunately, there's a tremendous amount of uncertainty between now and then that we're going to have to get through. And I think that we're going to see periods of heightened volatility. The volatility we've seen in the last couple of weeks has all been fairly positive. The week prior to the election, we had that one day, I think the market was up 4 or 5%. I think it's going to be kind of more of that moving forward. But like I said, ultimately, I think that any kind of pullback that we see, I would really view much more as an opportunity than kind of a structural issue within the overall economy. Before I hop into the portfolio, are there any questions about anything that I just mentioned?
No, I think we're good.
Okay. So I'm going to move on to page 18. This is a relationship summary. This shows the two accounts, the main account, which has kind of all of the asset classes as well as fixed income, and then the sub account, the one that's about $1.4 million, and that holds the individual large cap securities. One change that we did make following the June meeting was to change the mandate of that second account, the $1.4 million one. Previously, that large cap strategy was focused on kind of value, high dividend securities. We moved that strategy to a more kind of core focused strategy, and that has certainly benefited the portfolio as through this recovery, kind of growth stocks have been really the place to be. There's been a tremendous discrepancy between the high dividend value names and kind of the more kind of technology, healthcare growth names.
Yeah. So Matt, I did read ahead. It's Carrie's stuff. It sounds like you want to propose merging these two accounts.
Yes. Yeah. So for the sake of kind of keeping things simple, there's really no reason for us to have two accounts. We can have all of the assets in a single account. My argument would maybe be to wait until early 2021 to do that. That way, we have time to make sure that all the assets get transferred over and there's no kind of disruption in the portfolio. But there's really no benefit for there to be two accounts. As far as kind of the performance and things like that go, that would all be kind of grandfathered in. So we're really just reducing the accounts from 2 to 1, just consolidating into that main $7.25 million account.
But what would the implications be for how the funds are invested? Right now, the smaller account is individual securities.
Yep. So there would be no effect at all on how the accounts are invested. We would simply transfer in kind the securities from the smaller account into the larger account, and then just manage that larger account as a singular account, as a singular portfolio rather.
But the larger account now is managed with funds, and the smaller account is managed with individual securities.
Mm-hmm. Yep. So
And the
those are
reason
all-
that the smaller account was managed with individual securities was because it was intended for income. And since we've changed that, I'm not sure I understand why we would continue to hold individual securities.
Yeah, I think Rick, your question is a different one than what Matthew was suggesting. He wasn't getting to the point of, do we want to keep it this way yet? He was just talking operationally. We don't need two accounts. We can put it in one, regardless of what we do. So I think that's a different
Okay.
question than what you're asking.
All right, then my question would be,
Yeah.
why does it take a month to transfer it from one account to another? That's an that's an ACAT transfer at most, right? I mean, that should be a day tops.
Yeah, I mean, we could certainly transfer it. My only concern is that as you know, there's a potential that dividends could post to the old account. Like I said, I just think for simplicity's sake that maybe it makes sense to wait. But if that's something that you're anxious to do, I don't have any real issues with it. And I agree, it's not an ACAT. It's actually not even an ACAT across. It's just a simple transfer from one account to the other.
Yeah, and you can just sweep the dividends. I don't understand why you wouldn't just get it done.
Yeah, so I tend to agree. Before we go there, can anybody think of a reason why this seems like a perfectly logical idea to me? Is there any reason why it wouldn't be?
So the only reason I can think of, I wasn't here when the former trustees decided they wanted this dividend portfolio, but the only reason you would really have it this way is for performance tracking. Remember, there was always been a question against what you were basing the performance against, that blended index. It's the only reason to have it separated. So if you want it separated for performance so you can track it, you keep it this way. If we're going to get rid of the dividend portfolio anyway, which is the second question kind of that Rick has been raising, then it won't matter, right? But this was done for performance tracking. That's the only reason why it was done.
But and I agree, Christine. I thought that, Matthew, that you said that we'd already moved away from the dividend focus in the individual security holdings.
We did, that's correct.
But we
Yes.
still have a benchmark that there are still two separate benchmarks for these two accounts, Rick. That's what I'm saying. The
Yeah.
performance
Okay.
have two different benchmarks. You put them together, you're gonna have one benchmark. That's all I'm saying. So it's done for performance tracking.
So I think
Okay.
we've made a decision pretty affirmatively to move away from the dividend cash strategy. I mean, I think that's settled law at this point.
Yes.
Certainly if we don't, and as to how we're executing it, that's a separate question. I think that's kind of where Rick was going. But obviously if we want to Christine said, and I get it now, it was to be able to track how we're doing different parts of the portfolio. I got to believe that if a future group of trustees could come up with different metrics and even do subsets of benchmarks within the funds. So that's a long way of me saying, I think we might as well just combine the two accounts.
Yeah, I think that's fine. I think we just have to talk about, if you're not changing any of the investments, what is the benchmark? What's the right benchmark to measure performance against? Because you have two different benchmarks right now.
Yeah. So Matt, that's an interesting question. Is that with the merged portfolio, is there a better benchmark? And I don't expect you to have the answer this second, but is there something that would?
Yeah, so I would honestly need to think about it. I do think that there are a couple different benchmarks that are being used. One breaks out kind of a bunch of different equity asset classes, and then includes the Barclays Intermediate Government Credit Index, and then the other one is a blend of I believe it's ACWI and the MSCI All Country World Index and the Barclays Intermediate Government Credit Index. I think that there's not a right or a wrong. I think that the MSCI All Country World Index is probably kind of the closest equity benchmark to the way that we're actually managing the portfolio, meaning that index is comprised of, it's about 50% large cap, 40% international, and then 10% emerging markets. So the way that we're managing the portfolio, it's kind of similar to that. I would argue that that the MSCI All Country World Index is much heavier in the international space, and if it doesn't include nearly as much in small cap and mid cap. So I think that the benchmark right now is perfectly appropriate. But I don't think that there's kind of an ideal, at least off the cuff that I can think of, an ideal benchmark that I don't know if there's a better one, I suppose, is what I'm trying to say.
So this question of the benchmark is actually much more significant to me than whether we merge the two accounts or not.
Sure.
Rick, does it make sense to give Matt some time to think about it, what the benchmark would be for a combined account, and then make the decision next time?
It could. I feel like we're swimming in molasses here. I think we've talked about moving out of the individual or out of the dividend portfolio. It feels like it's been a year that we've been talking about this. Maybe I'm wrong, but I think it goes back at least 12 months.
Wait, so maybe
We can do that.
So the question that you had raised, Rick, to begin with was, if we move it over, right? If we move this into one account, how would things be different? Matt said they won't be different. We're now saying we want you to sell off all of those individual securities and invest in funds. Is that what we're talking about?
Well, now I think there are three questions, right? One is, do we maintain the account separate? The second is, what do we do with the benchmarks, right? And then the third is, if we do combine the accounts, do we want to continue to have individual stocks, a chunk of individual stocks? I
think the third question will inform the benchmark question. That's why I think you have to take the third question first. What are you going to invest it in before you know what benchmark you're going to measure it against?
I guess if I think
the first operational question,
if I think about the history, right, and I don't know the history very well, but my understanding of the history is that we set aside this group or this set of assets because we thought we needed income, and so we set it up as an income generating portfolio, and then we told Bank of New York Mellon, generate income. And they said, okay, well, we'll do that with individual securities and we'll manage them differently and it'll produce income. And I think we've now said, we don't want to do that anymore. We want to look at total return, and we want one portfolio to do that. And then it seems to me that having individuals, now if we continue to have individual securities, we're saying, well, we've got one objective, and we had one. And before, we had a set of mutual funds that we were using to try to accomplish that objective. But now we're kind of carrying the old objective with us if we continue to have individual stocks.
I think we all agree with that. I think that's where we got to last time. So the question is, are we saying right now, do we want to say to Boney, sell the individual securities and invest it all in funds? That's my question, right? Because if you do that, we say, yes, go ahead and do that. Then it's easier to pick the benchmark. So
if I could just interrupt for 1 second. So the portfolio now, the individual stocks we have right now are not on kind of an income generating mandate, right? The individual stocks right now are very kind of core focused, basically trying to beat the S&P 500. If I look at the way that, let's just take large cap as an example, the way that the large cap allocation is allocated, and I'm on page 22 here, it's about half in individual securities, maybe a little less than half in individual securities, and then about half in an index S&P 500 mutual fund. So I think
I'm sorry. So where would you're saying? I think part of the problem we're having, Matthew, is that. Matt, is that the page numbers that you're citing don't match the page numbers that we have. So if I look at page 24.
I'm sorry, I am looking as a singular.
Rick,
so I don't have the agenda.
That says, see on your 22 out of 51.
Yeah.
Using those numbers, not the ones at the bottom.
I'm looking at his, I see 22 out of 51. That's where I am.
Yeah.
Okay, so and that's the one we're talking about. So then I'm sorry. Oh, large cap core individual equity, 16%. And how much of that is, but this is as if there was just one account.
No, this is a combined portfolio. That's
what I'm saying, as if there was just one account.
Yep.
Yes.
Oh, okay. So the large cap individual securities, that's 16% of the whole portfolio. And
Correct.
and if we took out that account that was formerly value or dividend, how many individual securities would there be? How many individual securities are there in the larger account?
So in the larger account right now, there are no individual securities.
That's what I think we're saying, right? So it seems to me that if we're going to say that we're going to have one account, and we had one account before, and we chose the way that was going to be managed, well, I don't know. I mean, does anybody know if we altered the benchmark or the target of the larger account when we set up the smaller one?
No, but I think we're getting hung up on an operational issue here. Whether it's one account or two, doesn't matter.
Correct.
It's just operational. We
Yeah.
just need to figure out from an investment mandate point of view, do we want all funds or do we want any individual securities? If we want all funds, that's our mandate.
Right. I agree.
So I think thinking about one or two, let's not worry about that. Let's just talk about how we want to invest. Do we want any individual securities? I think that we just rehashed what we did 12 months ago. We're done with individual securities. We don't think they serve the purpose. So we're happy to have it all invested into funds, which then facilitates a much easier move to one account, right?
Right. So
I'm
think
sorry, we're violently in agreement.
Correct.
Yeah, absolutely. That's what I'm saying.
Yes. And Jennifer now wishes she never joined. So let me make a proposal, and if somebody likes it, they can make a motion. One is, as Christine said, the operational issue. I think regardless, it makes sense to combine the two accounts. So let's start with that. Second, I do want to hear, and maybe not today, because Rick was getting to a very investment philosophy issue. I think, Matt, and I hope you'll agree, you know what we want from a philosophical standpoint. It is not a cash-driven portfolio anymore. It's total value. Yes. I don't know enough. I'm not smart enough to know that. Does that really mean you don't have any equities at all? I mean, does having equities in a portfolio that looks at total value still make sense? And I'm just not smart enough to know, and I don't know if I'm comfortable enough direct.
It's total return, not total value.
Total return.
Yeah, so you absolutely need
and you're saying individual equities, right? Rather than
and I just don't know.
To me, it's 6 of one, half a dozen the other. I think that if we were to buy mutual funds, for instance, in this portfolio, the underlying holdings in those mutual funds are allocated very similar to the way that the individual securities are managed in this portfolio right now. So, I think that it does give you a little bit more control over what names you actually own by owning individual securities. But honestly, I mean, if you want to only own mutual funds, we can certainly do that. I don't know if there's a ton of benefit from only owning mutual funds.
Yeah. Okay, so I go ahead, Christine. I'm sorry.
I was just going to say, I am with you, Jim. Whether it's all funds or funds and some individual securities, right? Whatever gets us to the result of what we're looking for to maximize the total return, that's where we want to end up.
So
if I could just add one more thing, I will say that as part of my understanding, the portfolio has excluded the names on the Carbon Underground 200 list. So we can do that with individual names. We are unable to do that with mutual funds.
Right.
All right, so that's a separate issue.
I'm not sure that I'm not sure that I agree with that. By the way, I think that there are mutual funds that exclude the Carbon 200, or the Underground 200.
Sure.
In the interest
Well,
of-
there are, but then you're really pigeonholing yourself into a very significant, like, I mean, that's a different mandate for the whole foundation, don't you think?
It is. I'd rather not reopen that issue right now. I understand it, and we do have, because I was here when that mandate first came in, and it had its own complications. So to get us out of this conversation, my recommendation, if somebody would want to make a motion to combine the two funds, and also ask Matt and anybody else to suggest, do we keep the same benchmarks or propose a new one? Because I do agree, Phil, Christine's correct. It's just an operational issue, but it does send a message that we want one fund with one investment philosophy. And I think we all vehemently agree with that. Sorry, any other discussion?
Okay, I move to combine the two accounts. And I move to combine them into the larger account. So the larger account would survive. That's a motion. Is that an appropriate motion?
Yeah, that's fine. Second.
Yeah.
All in favor?
All right.
Opposed? Passed unanimously. We got out of it. All right. Carrie, do we have anything else we need to hear from Matt?
No, I don't think so.
Okay, so Matt, you're certainly free to stay, but if not, we thank you for briefing us this time. I think you've got a pretty clear idea of what we're looking for.
I do, yeah. So perhaps at the next meeting, does it make sense to kind of come prepared to discuss whether these benchmarks are appropriate and maybe any changes we might want to make to them?
Yes, please.
Okay.
Matt, sorry, we also kind of jumped on you with reading ahead. Was there anything else in the portfolio that you wanted to point out to us?
Just that the portfolio is effectively neutral stocks and bonds. We have 61% in stocks right now, underweight to fixed income. We have some allocation to high yield. I would expect us to maybe add a little, maybe 1% or so to emerging markets debt. But as far as the portfolio goes, it's in line with kind of our best thinking that I talked about on that diamond chart earlier.
Very good.
Okay.
Anything else for Matt? No. Thank you.
Thanks so much. Really appreciate it.
Thanks, Matt.
Thank you.
Carrie, I think you're up next.
Okay, so I'm going to turn to the treasurer's report, which begins on page 2. And I'm looking at our fiscal year first quarter, July 1 through September 30. We have received about $56,000 in receipts, basically between the sale of cemetery lots and perpetual care. We dispersed $22,830, and I've identified all of the disbursements. They're pretty standard. Small amount for Chamberlain Park upkeep, lot repurchase where somebody who owns a cemetery lot wants to sell it back to the town, most likely because they've moved out of town and really aren't eligible to own a cemetery lot. And then we also turned over the the remaining fiscal 20 lot sales that we did that back in July. So we return those to the Cemetery Commission. And then we had a $150 scholarship that somebody received a scholarship back in 2006 and just cashed it. So interestingly enough, it wasn't even listed as an outstanding item, and the bank just took it. So that was great. Person would have done better if they put it in the bank or bought something with it, but they finally got their $150. So any questions on any of the activity in the first quarter? I think one thing that I pointed out in my memo is I'm still struggling with, we have lot sales, and then at either once a year or twice a year, we're turning 100% of the lot sale money that we take in over to the cemetery commission. And I don't really understand why we're doing that. It doesn't really make any sense. So, you know, we've been in search of trust documents and we're still hunting around, but we're definitely hoping to find something that maybe will point us to why we're doing that and why they're not just taking in their own money and holding it.
So essentially we're laundering money for the cemetery commission?
It feels like it.
Great.
It feels like it. So that's kind of an outstanding item for me that we're hoping to get to the bottom of and understand why they're doing it that way, because you would never set up a trust fund for that purpose. So I think we got off track somewhere. So coming up for the next quarter, which we're already in, we have a request from the Silent Fund for holiday gifts. That's an agenda item that's a little further down. And then the scholarship committee will be looking for their various scholarship awards. And we need to get through the fiscal 21 distributions to make sure that agenda item before we can talk about what would be available for the scholarship committee. So the net distributable income for the first quarter was about $26,000, and net gains were about $35,000. I've identified how the portfolio appeared as of 9/30/20, and your meeting, it meets all of your portfolio requirements. And then I've included the detail on what all of the transactions are. I'm happy to go through any of those with you. And then just the standard reports. At the end of June 30, the market value of all of the trust funds was $8,799,511, with an additional almost $78,000 in the Sawyer Trust, which, as you know, is for energy efficiency improvements. So that's pretty much it on the quarterly activity, but I'd be happy to answer any of your questions.
No. Absent any motion to approve the treasurer's report?
Sure, you could take up a motion for that. I'm not sure if we do it, but that's probably a good thing to be doing.
We put it in the minutes. I agree. I don't think we ever actually do it. So I feel like it's going on the straight and narrow.
Sure, motion to approve the treasurer's report.
Second.
All in favor?
Aye.
Aye.
Opposed? Opposed? No. All right. Approved.
Thank you. The next item is really just there to remind us all that we need to do this, and mostly this is me. And this has to do with our Opeb trust fund account, which we've talked about a number of times. You will recall that we have a new bylaw for the Opeb trust fund, and it includes having you provide me with some advice on how to invest that. And so that is an item that I'm still working on, and I need to get that to you. I'm actually hoping when we talk about the investment manager RFP, if you go forward with that, I'd like to include the Opeb trust fund, and we also have a pension reserve trust fund that I'd like to have included under a contract if you move forward with a new one.
Could you remind me how big, and I know it's a big nut, how big is the Opeb trust fund?
So the Opeb trust fund is over $20 million at this point. And then the pension reserve, it's not actually a trust fund. It's not technically a trust fund. That has about $10 million in it. So the pension reserve fund, we are drawing from annually, and we expect to be doing that for the next 10 years. And then that fund would be exhausted. The Opeb trust fund, there's no annual draw on that yet, and none anticipated for more than 10 years at this point. So really two different objectives with those funds, but it would be nice, and it might make the portfolio a little more attractive if we have the trust funds and we have these other two funds as well. So then next item then would be 3B, and that would be an update on fiscal year target market value, the distribution policy, blah, blah, blah. And I put a memo in the packet on page, let's see, starting on page 14. Oh, I guess I have items 3B and 3C mixed up in the packet, but if you could turn to page 14 in the packet, you will recall at the last meeting, we intended to set the fiscal 21 distribution rates, and Rick had put that together, but there were some issues, and Rick and I have had 1 or 2 meetings in the interim, and he's done a lot of work to help sort this through. But I just would like to run through this because we discovered that there were some issues with the way that I had been calculating the value of individual funds. So for the newer members, I've been with the town for about 4 years. I started as the treasurer for the trustees. I probably had been here about 9 months. For the 2 of you who have been on with this longer than me, you will remember that Tony, after he retired, this was the last thing he wanted to give up. I don't know why, but for 9 months after he retired, he continued as treasurer for the trustees, and there was a transition. He and I spent quite a bit of time, and he showed me, how he was calculating all of the value for the individual funds and tracking the activity. I thought that I had started using the same spreadsheets and formulas that he did, but somehow something got off track and things were not being calculated the same way. And Rick was actually the one who picked up on this. And Rick, anytime you want to jump in, please feel free to do so. But what I ended up having to do is to go back to April 2017, which I believe is about when I started, and recalculate. So there was no change in total market value, total book value, how the portfolio was distributed. It really was an issue with the individual trust funds themselves, the 40 plus funds that we have, and how the market value was being allocated among those funds. But when I and I've included in the memo, I don't really need to go through it unless you would like me to, how the calculation changed and what it should be, and it is now back to the way that it had been calculated before. But what happened when those recalculations were made was that there were a handful of funds that had what I would characterize as some significant differences in their balances. Most of the funds, the differences were fairly slight, but for 5 of the funds, the differences, the lowest was a decrease of 7.92%, and up to 14.79%. So some significant changes in the silent fund, the 2 Anna M. Holland funds, which are scholarship funds, the George Flavin and Ruth Hilscher scholarship funds as well. And so with the adjustments to these funds, the proposed fiscal 21 distribution for 3 of the funds, the last 3 that I mentioned, actually moved from a normal range to a low range, unfortunately. The other 2, I think I think they were still in normal, but they're just at a different place in normal. But 3 of them will move to a low distribution range. And then the rest of the memo, I'll just hold off for now. I don't, Rick, do you, have I?
I think that the major issue that the revisions resolved was that the funds that were making larger distributions were not really being charged for those distributions.
Yeah.
And therefore they were getting credit for too much of the market return, and their balances were too large. And I think that, and Carrie says that I did a lot of work. I think Carrie did an enormous amount of work to go back, and I think you must have done that month by month, Carrie, for 3 years. That's a lot of work, but it did. Some of the side calculations that I did seem to confirm that the calculations are now much more accurate and much more reflective of what actually occurred.
Yeah. So certainly it makes sense that the disbursements screwed us up a little bit. I guess the functional impact of this is on these 4 funds, we may have ended up dispersing more money than we would have otherwise. Is that a fair characterization?
That's right.
Okay.
That's right. If I look at 20, yes, even in 20, the Anna Holland funds and the Flavin
Yeah.
scholarship, even in 20, they would have been in the low range, and we made distributions as if they were in the normal range.
Okay.
So they didn't jump to the low range in 21. They were already there in 20.
So, I mean, the facts are the facts, and this is why the system was set up this way, so that maybe we'll do lower distributions now to let those funds kind of catch back up a little bit.
That's right. That's right. And they are not way out of whack.
Yeah.
If we, I don't know if we have in the packet, Carrie, the current distribution ranges. I didn't.
Yes, should be there.
Yes. So if we look at pages 23 and 4.
Okay.
Yeah.
So on 23, you see the Anna Holland funds 1 and 2. You see the year-end balances are just slightly below the lower threshold. The one is at 59,206, and the bottom threshold is 61,146.
Got it.
It's really close.
Yeah.
It's really close, and the Flavin scholarship is also very close. So I think if we give them a couple of years to recover, they're likely to be back in the range that we want them to be.
Do we know that the Flavin scholarship, how much do we usually give out annually? Carrie, do you remember? Can't be much.
I can.
My notes say in last year we gave out $375.
Oh, all right. This is understood. Do you need us to approve anything, Carrie?
Probably not yet, but we'll get to the distribution ranges in a minute, and that definitely should be approved. I think the other few things that I just wanted to say about this, as I, spent some time going through this, it's still sort of striking to me that only about half of the trust funds, we're only really hearing from about half of the trust funds. And all of these trust funds were set up to benefit someone or something. And so it bothers me that we're not hearing from all of them. And I think it has to be because people don't understand these funds are available. So we, and we also maybe don't have a complete understanding of what the fund should be used for. We have a municipal archivist who's been with us for about a year, maybe a little over a year. And he told me that at any point in time, he has access to interns. And he, of course, would love, he's looking for projects for interns. And so this was a project that I thought might be appropriate for an intern, but it begins with locating the documents and then digitizing the documents and making them available for inspection. And so I don't need an answer from you this evening, but obviously it would be nice if we could pay an intern. And so it would be up to you to decide if you have any interest in, under the supervision of the municipal archivist, having an intern to help us with this project. Because I'm concerned that our archivist is probably, he's never going to get to it, but I don't know when he is going to get to it.
So this is something I'd be enthusiastic about, but I'd be interested to hear what everybody else has to say.
Well, can I first ask, how do the other funds get requested? If you're saying only half are requested now, how does that process work?
So honestly, most of it is generated by me because they're scholarship, annual scholarship distributions. And usually I'm just putting it in front of you. I really don't have like the Concord Carlisle Scholarship Committee. They don't contact me and say, could we request our annual scholarship distributions? It's really, the only people we really hear from are the Silent Fund, which is the Hugh Cargill Committee, and Delia Kay, the conservation agent for the town, who requests funds for the Chamberlain Park. Other than that, it's
and we did have a request from the Beatty Center last year.
Oh, and for sure you will again. So yes.
And there are a small number of funds, right, Carrie, that we just give them the interest every year.
Yes, and they do not put in any type of request either.
Right. And that, Jen, was like a holdover from when Tony was here, and he said, oh, look, these funds just get their interest every year, and nobody ever questioned it. But to that point, it's because we probably don't have the documents either.
Yeah, so it's possible that some of these groups don't even know that funds exist or what's in them or
What they're for.
Or what they're for.
And there could be some orphan funds in there as well, that there's no group designed to request it. When I first joined the committee, the chairman was Tom Doe, was enthusiastic about, let's put an article in the newspaper and let people know what a great thing this is. And the concern that came up, which is a concern I still have, is that I'm afraid we get calls from a million different people and we don't have a good handle on what some of these funds are really for. As Carrie said, we do have some regular customers, which is great. Mm-hmm. Which is why I would love, I don't know, Carrie, if we need to wait. If this committee is authorized to pay an to do it, because I really want to see what some of these funds are really for.
Yeah, you certainly could make a motion to authorize, you could, I did not talk to the archivist, so I don't know what kind of money we're talking about, but I would imagine an archivist intern is happy to be making minimum wage. So,
and perhaps we could authorize a certain amount of funds and encourage them to look for archives for the largest funds. So we could start with the largest ones and see what we can find out, because a lot of the funds are really quite small. But there's this Fannie Wheeler fund. I just saw it.
But if you go to page,
which is $90,000.
But if you go to page 31 out of 37 in this first packet that Carrie sent us, there's a start of what each fund is for. There is a description.
Yep.
Right. And so, I mean, I think that, Tom and, Jim, your concern is well founded, but to the extent, like some of this is, we could, there's some purpose there. Whatever extra information we can get, great. But I do think that a lot of this, for the benefit, 22, Harriet Louise Eaton Fund, for the benefit of the people of Concord who are physically disabled in a hospital. It's pretty clear, right?
Yeah.
I mean, we can get that information out there, so I think that, we can get some of this out there. I still think getting an intern is a great idea and having them like, look at this list, see what documents we have and confirm it all. But I do think we have a good start.
Yeah. So Carrie, would it help if we authorized an intern with expenses not to exceed with like $3,000 to start?
Yeah, I think that's perfect.
I don't know,
$50 an hour, that's like, what, 200 hours? They should be able to do something in 5 weeks, you'd think.
I just made up the number. Whatever you guys want is fine by me.
I think that's a good number.
Depends on how quickly they move. I mean, I'm just curious in looking at these, are there any, because I don't know what the historical documentation are, were there time limits on any of these? And have they expended them? Are there any that could have been merged? And if there are no succeeding organizations or groups still attached to them, and they're now in the hands, obviously, of the town, but like, what do you do with them? And obviously, these are steps down the line because we're still missing information, but.
Yeah. So some of these funds were started with British pounds.
Yes.
A piece of land.
And some of them actually do have an end date. I think one is for the 350th anniversary of Concord.
Yeah.
And I think it was over.
Yeah, number 38.
Do them, but
Hang on
but
for a while.
yeah, but Carrie, I think the focus should be on digitizing them first, because I'm sure Jen would want to look at them. I want to look at them, and hopefully that'd be something we could make as a public resource as well.
Absolutely.
Okay.
Is there a motion to authorize $3,000 for an intern?
Where does this money come from?
My next question.
I was just going to spend it.
That's my next
Well,
question.
we don't have a budget.
Oh, good point. It has to come from a fund.
No, we pay for Carrie, right?
It comes.
It's charged, but that's charged to all the funds, isn't it?
Right.
Yeah, I would do it. You do it proportionally across all the funds.
Okay.
It would just come from the earnings.
Okay.
Yeah, every fund carries its own weight, and there's your intern.
All right, is there a motion?
Sure.
Also move.
Yeah.
I'll second then. Christine moves, I'll second.
All right, all in favor?
I
Opposed?
Aye.
Carrie, we authorized an archivist intern for up to $3,000.
Excellent. All right. And then
We just it would be good to get a status update at our next meeting as well.
the one other item that I wanted to mention to you is something two weeks ago, I was invited to tour the Sleepy Hollow Cemetery, which was really exciting. It was a nice day, one of the last nice days that we had. And I was talking with the cemetery supervisor, and she mentioned to me that the cemetery committee has recently voted to authorize the sale of 3 mausoleum lots. I'm not sure if any of you have heard anything about this. But they're looking to sell these lots for a huge price. I mean, she told me $900,000 a piece.
Whoa.
And
You get a nice house for that. Yeah.
Yeah, I said, really, $900,000? So that, if that happens, that money is going to come into the trust fund. And I can't imagine we're just going to turn that over to the cemetery committee, because they couldn't spend that kind of money. So not that it would change how you would be divvying up the portfolio or anything, but I just wanted to let you know that there's a potential that a large amount of money could be coming in sometime this fiscal year into the
And
cemetery lot.
which
trust.
fund would that go into, Carrie?
33.
Wow.
You know, they may partially answer the question you had before, Carrie, about why they funnel the money through us. Maybe it's for a situation like that, just to park it somewhere.
Yeah, and then I can't, then the perpetual care is typically the same as the lot sale. So I don't know what they're going to do for perpetual care, but I would imagine if somebody's paying sizable amount in perpetual care, they're going to want their mausoleum hand polished on a monthly basis or something. I don't know. So the cemetery division may have some increased expenses as a result. I don't know.
I'm going to start a cemetery.
Yeah, it's quite a business.
Yeah.
Well, you're going to live
You'll
in that
always have
house.
customers.
You're going to live in that house much longer than you live in the house you're in now.
That's right.
Okay, so Rick, do you want to talk about the fiscal 21 distribution ranges?
Sure. I think that we need to go back here a little bit. The original Exhibit A, which we set up back in fiscal 19, changes a little bit because of the calculations that Carrie did. So I'm wondering if the appropriate thing to do is to approve the revisions to Exhibit A, which set the original target values for the funds, and then talk about the distribution ranges.
So that's on page 22.
And 23 perhaps, no, 22 only. So you see they change very little.
Yeah.
They're almost all less than 1%.
So it's the same formula, just using the corrected numbers.
Yes, that's correct. Is that? So actually, the headline on this should, rather than being the fiscal year 20 distribution ranges updated, it should be the target market values as of 6/30/2018. Yeah, that's when we set them.
But when we set them for
So Carrie made changes starting in 17. So the way these were originally constructed was to average the balances over the 10 years ending in fiscal 18. So Carrie changed 17, changed 18. So that changed the last 2 years, and that changed the average balances a little bit. So that's what these revisions reflect.
When we set them in 18, wasn't that for fiscal year 19? And then in 19, didn't we do it for 20?
Well, but fiscal 18 is the base. And every year after that, we're just adjusting everyone in the same proportion for inflation.
Yeah. We snapped the line. Yeah.
We snapped the line at this point. That's right. So this would change the snapped line slightly. And then the fiscal year 21 ranges depend on that, because we're just applying inflation for 2 years to that.
seems consistent with what we've talked about before to me, but.
Right. I will tell you how I did this. I just took Terry provided revised numbers for year-end 17 and year-end 18, and then that just flows right into this.
Yep. So Jen, just to give you some history on this, as Christina mentioned before, the philosophy had just been whatever cash, I'm oversimplifying, whatever cash each fund kicked off, that would be allowed to be distributed. You know, we spent a lot of time talking about going to kind of a total value approach, which we've talked about before, and Gavin talked a little bit about it as well. But also, you know, as the market goes up and down and as inflation goes up and down, having a good guide to see whether we can give a little bit more and give a little bit less, or if we're right in the Goldilocks zone. So Rick did a ton of work to kind of pull together the formulas, and Carrie's kind of giving him some updated information. So this is a guideline. I will also tell you that any future group of trustees can either reevaluate this, or they can go above an amount. I mean, we're not tying anybody's hands. What we are doing is putting some structure here that frankly never existed before. Before we would just give out the cash.
Well, out of the interest bucket.
Correct. That's right. That's exactly.
Yeah.
Yep.
And so do you try to always give in the normal, meaning here 4% range? Is that kind of the standard, or it depends?
I think that actually we were giving below the normal range, because
Correct.
most of the funds are above their target market value, right? I think this is back to what Carrie is saying before. We've not been giving out the sort of the amount that would allow us to preserve the funds in real terms, in purchasing power terms. And so they've been growing in purchasing power terms.
Correct.
And so I think the concern is that we've been less generous than we could have been, and the endowments are growing. And that's great for somebody someday, but it's not great for people right now.
Yeah. So as Christine said, the focus was giving away the interest. What didn't account for is just the growth of the underlying equities or funds. So I think we're looking at the total value. So regardless of how the money comes in, whether it's interest or just the underlying equities or fixed income goes up, we judge how much we can give based on how much the value's grown.
And I think it kind of highlights even more so about why we have to figure out exactly what these funds are for.
Yeah.
Yeah, it really does. And particularly in years like this and what next year will bring. I mean, I think this is why this is very important. Not to say that some of these funds won't matter in what year, if it's cemetery related, clearly that's any year, but some are probably even more in need now than others.
But we even have some scholarship funds that we're not distributing from, and obviously if the name includes scholarship fund, we know it's a scholarship, but we don't know who is supposed to be distributing that, and maybe some of those scholarship funds could be come under the jurisdiction of the Concord Carlisle Scholarship Fund. Maybe we could put them in charge of distributing. But even the League of Women Voters has a scholarship fund that doesn't get distributed. And a few years ago, I was working with one of the members, and I thought they might start awarding that scholarship, but that didn't happen.
I mean,
I would love to shut down some of these funds. By shutting down means the money's gone to its intended purpose at a rate that the donor would have been comfortable with.
yeah.
I don't know since I've been on the committee, we've never done that. Although on the Sawyer Trust, we might be getting close.
Well, you get into a thing called designated funds, and like how you can actually, as a board of trustees, are there any living donors anymore to any of this that you can get them to acquiesce to say, yeah, go ahead and do whatever you want with it at this point, because the fund ran its course. I mean, I've been involved with a few nonprofits where you've had to actually do that. We have to get the consent of the donor to say, the designated fund doesn't exist anymore. What do you want us to do with the money? Here, though, I think it's more about, like, if we can find someone that can get the documents and understand what they were originally intended for, certainly make this an easier job.
Yeah, agreed.
Right. Agreed.
So is there anything we have to approve, Carrie?
Well, I think Rick suggested approving the updated target market values on page 22. And then I do think you need to approve the proposed distribution ranges on 23.
Any discussion on those or questions for Rick?
Up to me.
No. Okay, is there a motion to approve?
Second.
Second,
And
all in favor? Aye.
All right.
Opposed?
Aye.
All right, passed. Approved.
So that was for both of the items, the updated base and the fiscal 21.
Correct.
So then, Rick, just so I understand, the proposed distribution ranges. So for the silent fund, you can distribute $21,499.39 this fiscal year. Okay.
Right.
Got it.
It would be great to know, I mean, which ones are like the silent fund and the other ones that are actually going out to these groups.
So on page 16.
Okay.
On
Yeah.
page 16, there's a list of all of the funds, and the ones that are highlighted in blue, if you can.
Yep, I have it.
Those are the ones that you distribute from annually. The ones that are in black are the ones that there have been no distribution requests for either ever or for a very long time.
I am certain there's funds that that if we did a little bit of research, we could find ways to get into the community.
Mhm.
And I think maybe that's where an archivist starts, is some of the ones that are silent, no pun intended there.
Yeah.
But definitely some of the larger ones and some of the ones in black here that you have.
Yep, agreed.
And yeah, I think the idea around ones that are scholarship, I mean, looking at this political science scholarship, there's another one down here, Concord Scholarship Fund. I mean, I know that the Concord Carlisle Scholarship Fund has a well-oiled machine, and how they do that. We are probably not set up to be handling scholarships. It's a lot of work. And, even if we manage the money, but they know how to deal with the whole distribution piece, so.
Correct. Yeah, we've never, my 3 years here, we've never looked at like scholarship applications or anything like that. Somebody's got to come ask us for the money. And we don't care who they want to give it to. We just write the check.
Yeah.
So, all right. What's next, Carrie?
So I guess item C, 3C, just to mention, we had talked about a grant application form or a beneficiary notification letter.
Yeah.
I don't think that there's anything new on that, but I didn't want to lose track of it. Is this something that you think is still necessary, or hold up?
Didn't I send a draft of that?
You did.
We had a draft of like what they could use to fill out.
Okay, I do remember that, so I'm not, but we didn't approve it.
No. Carrie, could you send that out again if you see it, or Christine, just send it out to everybody if you still have it?
Yeah.
Because I think that goes part and parcel with our larger discussion here in terms of finding out how to, because the way I could see this going is if the archivist does what I think what we all hope, which is pull together all the information,
Right.
and then we get it out in the community, whether it's a, you know, Concord Patch article or something like that. That's when we're really going to need that form, I think, because there will be, I mean, I could see Jennifer, people in the community who realize when there's funds here that can be put to good use, that we may really need that form. For now, it's probably not as time critical.
Yeah, I think that all of that information would have to go on a website, right? Here are the
Yeah.
funds, here are the purposes, here's the way you ask for, you request a distribution, and that's where that form would come in. So we definitely have a form.
Yeah.
I can't remember where I drafted it, but I'm sure I can find it someplace.
I'm sure I have it, Christine.
Okay.
I'll let you know if I
Okay.
find it.
I'm sure it's on one of these computers, so,
Yeah.
if you can't.
Just to set expectations, what would be, and we tend to be a very deliberative board, which is good. If the archivist makes real progress before the next meeting, I think we really next time spend some time talking about how we kind of roll that out. Like, can we get all that information online? Can we get Christine's form online? And then whatever else we want to do in terms of outreach, that would be a fruitful discussion next time.
Makes sense.
Yeah, and Jen, not to give you homework, but I mean, it's kind of up your alley and what you do. And so any thoughts you might have on that to get to the town would be really helpful.
Absolutely. No, and I'll be happy to look at the form drafted in the letter to see what
Right.
that looks like, and happy to have done rollouts like of that before.
Great.
Certainly.
So then item 3D is a request for $7,500 from the Silent Fund for holiday gifts. Judy Terry from the Hugh Cargill Committee sent me an email this afternoon, and she said she had another commitment this evening, another meeting, and asked if it was okay if she was not here. And I know you know her and you know what the request is about, so I let her know that that was okay. So that $7,500, I mean, you can see on page 13, Jen, this is how informal this is, send an email, but you can see I prompted them to ask me for the funds. So
They are usual regular customers. We've seen these guys before, right?
Oh.
yes, but
Times, Jim, how could you forget?
I know.
You guys are the ones we only see them, right? Like they're the only ones who actually come in and talk to us.
Yeah.
yeah, they are. And, it may just be, I was preparing for your meeting and they weren't quite thinking about the holiday gifts, needing the funds, but because you only meet typically quarterly, I'd rather have it in front of you and have you approve it.
Yeah. So I assume this fits squarely within the guidelines that Rick helped us develop.
It does.
So back on page 23, again, the maximum distribution is about 21,500 from the Silent Fund. And typically they'll be back in the spring requesting $7,500 for the summer camperships if there are summer camps next summer. They get $7,500 for summer camperships in the spring. And so they do have some of that money left over, which they will use for the holiday gifts.
So I do think, and I'm open to any discussion. Obviously, I think we should approve this. I also maybe think we mentioned to them, given with COVID and everything else, if they wanted to, be transparent about what we could give. I say what's available in the funds to be dispersed, and if they want to be a little bit more aggressive heading into the spring, I mean that's why we work to put the system in place.
I did mention to Judy that she could ask for more if she needed it for holidays, and that's when she told me they still had some left over from the summer camps, and so she didn't feel that they needed more.
Right, because there were no summer camps. So.
That's a good point. Yeah, they didn't spend the money. Yeah.
Right.
So, Okay, any other discussion on this one?
Nope, I motion to approve the distribution, 7,500.
Second?
Second.
And all in favor?
Aye.
Aye.
Opposed? Passed unanimously.
So the next item is request for proposals for investment manager. I was able to get a hold of 2 different RFPs. You know, I don't know if you want to take this up tonight, schedule another meeting. Maybe 1 or 2 of you have a particular interest in this, or maybe you don't even want to do it.
So I'm glad, because I do want everybody to participate in this discussion. So I was one who pushed for this harder than anybody. Having said that, I'm not sure when my term ends, but this whole process will probably take longer than I'm going to be here. So this needs to be something that, frankly, the 4 of you really want to keep moving on for. I do think there's value in it, at least to, you know, obviously the quality of service has declined for very understandable reasons. We don't have a town resident here. Although certainly the idea that we might have a much larger portfolio leads me to believe that we can kind of get back to what we had before. But particularly to the people in the financial services industry, is this worth chasing, or is this something that's just going to take a lot of time that maybe might not be worth it?
I will, in full disclosure, have to look at our policies. I may have to recuse myself from any selection of investment managers.
Understood. Okay, we'll leave Christine out of this one. Gavin, what do you think?
Well, so I guess I think about it like, you know, it just seems like Matt he seems like someone that was put on the account, you know, as
Great.
like a kind of fill-in, and it's probably not what you want. You're probably looking for someone that has a little more intimate knowledge of what it is that we're trying to do, that's more engaged about what it is they're hoping for to accomplish. But I don't know. These are big firms, and BNY is a big firm. Like there's a lot. Like when you deal with a big firm, they're used to endowments and things that are hundreds of millions of dollars. So you have to set your expectation by what's the service model we're expecting from them. The expertise, I think, is commoditized, in my opinion. So I think you're looking for something that's more attentive to your needs versus saying, and I mean, his presentation was fine, whether he stumbled through it or not. I'm not CFAs, and they're all smart people. Everybody's smart, but I don't want to judge a firm based upon the way that they present the information that they're giving to us, because it's all valuable. I just don't know the history of, like, it seemed like when I first joined as part of the trustees, you had, I can't remember his name, but he came to the meeting. He was at the first meeting I was at. He was nice, and he was really engaged, and he understood, and he talked to everybody. If that's what you're looking for, which I would recommend, I think you have to forgo the idea of the largest firm and the most prominent names being the ones that bid on the job. Now, Carrie's saying that there might be some folding in of the pension plan or something like that, which is certainly going to make it more attractive to bigger plans. But again, you're probably getting to like the $40 to $50 million range, which for big firms isn't that big of a deal. Which sounds weird, I know, I understand, but I don't know. I think that you can probably find local people that are invested in the idea of Concord and what we're doing here that have the investment expertise to be able to meet your needs.
Rick, what do you think? Oh, I'm sorry. Keep going again.
I was just gonna say, I'm not one of them, by the way. So I'm gonna recuse myself too.
Jennifer and I are going to make the decision.
Well,
Happy
as
to
long as you're
evaluate,
not,
but I don't want
as
to be
long as
one
you're
of
not
them.
a candidate, I don't see why you have to recuse yourself, right? Well, I think two things. I think first of all that I agree with Gavin what you said, and Jim what you said in terms of the attention that we're getting, and that this, even if augmented to the $40 to $50 million range, is going to be a small account for Bank of New York Mellon. It's going to be a small account for Fidelity. It's going to be a small account for any name that that would be sort of publicly recognizable. And I also agree that you don't have to hire one of the big name firms to get high quality investment management. And there are a lot of firms for whom $7 million would be a reasonable or an interesting account. And if you make it 40 or 50, it's a very large number of relatively small firms. So that's the first point. The second point is, I think it would be valuable for us all to have a discussion about the philosophy, the investment philosophy that we're looking for. And with Bank of New York Mellon, we have a very active approach, and it's a relatively expensive approach, which is a point that one of the people that used to attend the meetings would make at every meeting. But it's a point that I wear my heart on my sleeve. I'm pretty sympathetic to. So I think it's worth having that conversation, and I think it's worth having that conversation and deciding about who we want to be the investment manager on a regular basis, whether that's every 5 years or every 10 years, just to be sure that we're being prudent and that we're being good stewards of the funds that we're trustees of, fiduciaries of. So I'm perfectly comfortable and to take on a project, even if it's going to take a year or two to get it done, because I think it's something that we should do.
Jen, I know it's not fair to ask you, but any thoughts?
No, I actually, thanks to you both. I agree completely that, we want someone that's going to have our best interest in mind. And I think several times tonight, we've gone back to what is the intent here and what's the philosophy of what we're trying to do around the funds, but also clearly the investment here. And we want someone who has those interests and can speak to us about it and the changes that we might want to make. And I actually completely agree around I don't know what the cost is to run this, that working with BNY. So I can't imagine that it's small. And I think that we should be prudent about that. These aren't our funds. So I am not the expert in knowing how to look for one, an investment manager, but for those that can and assess that, I'm happy to go along for the ride, and maybe worthwhile. And I know that there are probably people that are local that could be helpful.
So, Carrie, my impression is that we probably want to keep pushing forward in this process. Now, there's never any commitment, obviously, if we get how much burden does this place on you?
Well, I have somebody on my staff who does RFPs, so I'm hoping he's going to be helping me. I mean, I think we have two pretty good drafts. Unfortunately, we'll put one. We can redraft one for this purpose. It's probably not going to be any shorter of a document because of all of the requirements that have to be included because we're a municipality. But I think we could, if you wanted to set a special meeting, maybe in January, that's other than your quarterly meeting to talk about this, I think we could have something drafted to present to you, and you could have your discussion about philosophy to make sure that we've incorporated that appropriately in the scope of work that we're asking for.
That would seem appropriate to me. To some of the points you heard from Gavin and Rick is that my suspicion is that when Bank of New York was first brought on board 20 years ago or whatever it was, there was a very Concordian philosophy that you want to have a big name bank involved.
Right.
And then with Troy taking it over, certainly just speaking for myself, there's a real value to have Troy here from an institutional knowledge standpoint, from living in Concord. I mean, they were expensive, but I certainly felt like we were getting good value. So I think we should do that meeting in January, but I want to be respectful of everybody's calendars. It does sound like I am intrigued by the idea of maybe we don't go with kind of what the traditional choice would be, but with somebody who could give, that we all believe could give the same level of service, but maybe either at a better price or with better service.
I'm happy to volunteer for that process to help you vet that thing out then, because honestly, I do. It's, you're dealing with a very specialized, you're not running a $1 billion endowment. You're doing something very specific here. So I think the extra expense, even if there is one, I don't know that that's true yet. I know that they lead you to believe that's true. I do think that the attention that they can give to exactly what you want is worth whatever you're going to pay them,
Yeah. Okay. Is everybody okay with doing a meeting in January?
Well, I'm actually going to be flying to Florida and back every other week. So it's going to be difficult to schedule. No, I'm kidding. I'm not going anywhere. I've got plenty of time, so I'm in for that.
I'll do.
All right.
You see, hey, Rick, you see how like 4 people dropped off the call just because when you said that, they were like,
All right, Carrie, schedule the meeting.
All right, Rick's out.
Yeah.
All right.
And I'll look over those drafts as well. I saw you had sent them out. Because again, based on kind of what Gavin and Rick were talking about, maybe we want something that looks a little bit different as well. But we'll see what you guys come up with.
I think they're pretty similar.
Yeah.
Yeah.
Are we officially a municipality? I guess we're an organ of a municipality, and so we have those restrictions that we have to meet.
Yeah, that was my biggest concern is like, do you have to have a certain size asset manager and that type of thing? Under the municipality's directive. But if you don't, I think you have a lot of options.
I'm not aware of any restrictions.
Yeah, the only thing from my perspective, I need somebody who understands what type of investments different municipal funds can be invested in, because there are restrictions. And when you pull in the Opeb trust fund, which is a true trust fund, and then my pension reserve, which is not a trust fund, and they both have different objectives, and then your funds can be invested in ways other than what my other 2 funds can be invested in. So I need somebody who understands that. I mean, I have somebody from Morgan Stanley who has been on my case forever because he's somebody that I've worked with before. If he is somebody that you brought before you because you liked his proposal, you're either going to love him or he's going to drive you mental. But he's obviously, Morgan Stanley is a big firm, and he does a lot of work with municipalities, and we already have another account with him. So I think there are big names that would be interested even at the size of the portfolio, but there probably is a whole group of professionals that we need to make sure that they know that we have an RFP out, and we need some help in understanding how to make sure these people are aware of your request for proposal.
Yeah, I just don't think that the due diligence should end at the highest level asset management groups.
I mean, I know the pension system has, you know, $180 million. And I'm always amazed at, you know, some managers have no interest. I'm like, are you kidding me? $180 million and not big enough.
It's not enough.
It's not-
So, all right, well, let's get the ball rolling.
Okay, so
Right.
do you want to pick a date now, or do you want me to just reach out to you? Might be easier if people check their calendars.
Usually we do pretty well when we put a tentative date on there and then figure it out afterwards.
Yeah, so the tentative date of the 26th would be for your regular quarterly meeting.
We're talking about Tuesday, January 26th?
Yes, but
Okay.
we probably would need a separate meeting for this, which I don't know if you want to, if the 12th or the 19th works.
Not earlier than the 19th.
Okay,
How about the 20th? Right in the middle.
I can't do that, but that's fine.
Okay, 21st.
I can't do that. I have another committee meeting the 21st.
Evan, you have a basketball commitment on the
Yeah,
21st.
yeah, Christine knows my basketball schedule already.
I know you have to coach
I
my
think
daughter.
Tuesdays. Tuesdays
So
seem
I
to be
can
the
I can
sweet
say
spot.
that I do not have any conflicts in those weeks. So you can schedule away as far as I'm concerned.
How about just the week before, the 19th? It'll be a little bit
The
painful,
19th works fine for me.
but so the
So-
19th for the special meeting, 26th for the regular meeting.
Good by me.
Does that work?
Great.
I think it's fine.
Okay, good.
7 o'clock.
7 p.m.
Got it.
And this is the,
This would be to review a draft request for proposals
all
from
right,
us.
RFP. All right.
One thing that occurs to me is that it would be relatively straightforward to talk to some of the larger investment managers like Vanguard, Dimensional, BlackRock, and ask them for a list of advisors in the area that manage endowments. And so we could get a sort of a starter list that might not be the usual suspects.
Yeah.
And I'm happy to undertake that if the group thinks that would be helpful.
I do.
Yeah.
I did too. Yeah, and Rick, if I can be of help there, there's a ton of RIAs in this area that are managing small endowments. You know,
Okay, I don't know that group, so maybe Gavin, if you produce, that list, and I go to then we'd probably, between the two of us, we'd have a pretty good set.
yeah. Why don't we do that?
Okay.
Okay, Carrie,
Yeah.
do we have anything?
So the next is the annual report, just drafted in the same format. I do need to reach out to Matt to get the benchmark because I didn't receive a report as of June 30. So I have to get him to provide the benchmark as of June 30.
Do you want us to make sure we review it before the next meeting? Is that when it has to go final?
Yeah, that would be good because sometime in January, I need to get it to the select board office.
I will.
And then finally, the Sawyer Trust, there's no update. There are no requests for distribution from the trust. I believe there's about $78 million. I'm $78 million. 78.
Whoa!
Yeah.
Let's have a party.
Yeah, hire that firm.
Getting late.
So is BD aware that that money's sitting there? I was hoping to use it for the new middle school.
Oh, wouldn't that be nice?
All right.
All right, that's it from me.
All right. Any other items any of the trustees would like to discuss? No? All right.
I'm good.
Do we have a motion to adjourn?
Motion to adjourn.
Second.
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 All in favor?
All
Aye.
right.
All right.
Have a good night.
Night.
Okay.
Fun.
And Jennifer, we'll have to have the celebratory drink that we usually have with new members another time.
Post-COVID, yes.
Wait a minute.
Rick's making up rules. You get
Yeah,
the drink when you leave.
I had that one. I had that one by myself.
Well, hey, Carrie, thank you very
I think
much.
what it was that Troy sponsored. I don't know. Was he here when you started, Gavin?
It was like his last day, of
Yeah.
course.
I
Yeah.
think that might have been it because he was the guy. He would lead that. So
Yeah.
we'll have to undertake that
We'll do it
ourselves.
another time.
All right.
Right.
Me and Jennifer.
Good night.
All right.
Have a good night,
See ya.
everybody.
Bye.